Today, I want to talk to you about Google. With the recent drop in prices across the market, especially tech companies were hit. And well, Google right now is extremely cheaply priced actually compared to previous all-time highs and rich valuations. So that's why I wanted to kind of review the company, give you my feedback and thoughts around it, and whether now might be a good time to open a position or dollar cost average your way more into it if you already had one. As you can see over here, Google, or Alphabet as it's called as a stock ticker, is currently the fifth most valuable company in the US and in the world actually, just behind Amazon. Right, and as you can see over here on Seeking Alpha, Google, like so many other companies in the US and around the world, as a matter of fact, have really felt the heat in recent times. Since the beginning of the year, we've seen a drop of 15%. And that's why obviously, if you're really long-term bullish on the company, now might be a great entry opportunity because you're getting, a good company at a discount. Now, on a 5-year period, you're still going to be up massively, 160%. On a 1 year, you would pretty much break even. If you entered a year ago, you'll be back where you started. But hey, this is part of investing. So if I compare Google to the S&P 500, you have the S&P over here minus 6%, while we just saw Google down 15%. On a 1-year period, it's actually even more pronounced. While the S&P is still up 9%, Google is slightly down. So you can see really the gap widening. On a 5-year period, though, it is actually reversed, where Google is up 144% and S&P 500 up 94%, though this is purely based on price appreciation. If I factor in total returns, then the S&P is up 108% over a 5-year period, while Google will be up 161%. And of course, on the 10-year period, it's more than double. So that's really, in the favor of Google. But on the short term, that's definitely in favor of S&P. So it just shows you it's very difficult on a long-term period to outperform the S&P. That's why I'm mostly invested in the S&P. But of course, as I said, now might be a great opportunity to acquire a bit more of those tech companies that you really believe in. Now, another big plus is, of course, right now the PE ratio, price to earnings, is really low. It's 16. I mean, that's really, really low for a tech company. I mean, even if I compare it to a completely boring company, different industry, Coca-Cola, right? It has a PE ratio of 24, which is kind of mind-boggling when you think about it. Now, in case you're wondering, yes, Google does pay a dividend, though it's very small. I mean, you wouldn't invest in Google just for the dividend. It's a nice plus, but not the main reason. It's 0.52% currently, payout ratio of 11%. So that's really good. It shows they have a lot of room to grow and continue paying that in the future. And as you can see over here, they only started paying recently. The first one was back in 2024. And it's not really common for, big tech companies to pay a big dividend. So I understand that they reinvest the profits more in the research and development, which probably makes sense. Now, last week, actually, Google also came out with their quarterly earnings call. And that's always very important to listen to see how the company is doing. First of all, you want to see the results. I'm going to show you in a second the actual earnings results, but also you want to hear from the horse's mouth, so to say. And for me, I really enjoy listening to those company earnings calls. You hear from the CEO, the management board, and just kind of feel the temperature, how the company is doing, their vision, how they're feeling about it, right? Because sometimes I listen to some calls and I really feel the CEO is very much down because they had a bad quarter, which can happen, right? But that's when you want the CEO to be excited and kind of spread enthusiasm, not to be pessimistic about things. So yeah, I always like to listen to. I use a tool called Quarter. It's free of charge. You can listen to it, download it on the phone. You can listen to any company earnings call on the go. I listen to it when I'm in the gym, when I'm driving. So really, really cool. Definitely recommend you. So here we are inside the slides of the Q1 2025 earnings report. And well, what can I say? I mean, kudos to Google for really delivering in a tough quarter, right? I mean, that was obviously before we had all the tariff mayhem taking place, but still really not the easiest of times since Trump came into power. And well, their revenues quarter over quarter, I mean, that's year over year, Q1 with Q1, because you don't compare, Q1 to Q4 to last year. That wouldn't be fair because obviously different quarters have different dynamics. So it makes sense to compare one quarter, the same quarter, with the quarter previous year. And here we see overall revenues, which is the main figure comprised of all the various revenue income streams, is up 12%, which I'm really happy with, right? As a potential investor, that's what I would like to see that growing. And lastly, the net income, which is what is in your pocket at the end of the day, grew by 46%. So they also became way more efficient with their management and expenses. You see here the operating margin from 31.6 to 33.9. So that's increasing, which is great. And I really like this chart because it really breaks down the different revenue streams and how they're doing, right? The first one is Google Search and other, whatever includes another, but mostly the Google Search part, right? Where people pay to rank higher in the past. And you would think that this will take a big hit, right? With a lot of AI search going on and so forth. And I guess long-term it will. But for the short term, at least quarter over quarter, it still grew by 10%. So that's good to see. We have YouTube ads, another big part of Google's business, right? A lot of people forget that they own YouTube, second biggest search engine in the world. it grew by another 10%. So that's massive. I mean, really, really nice to see that. The Google network, so I think that's advertising on different websites that are not directly owned by Google, but then through partners, that kind of decreased a little bit by 2%. And then we have subscription platforms and devices that grew by 19%, another staggering growth over there. So that's really, really good to see that overall, most of their various business ventures are moving the right direction. Also, Google's cloud business continues to grow, which is really nice to see. I think they still have a long way to go to catch up to the likes of Amazon, for example, and also the capital expenditure. In Q1 alone, they were spending $17 billion. I mean, that's a huge investment when you think about it. I think they're getting closer and closer to potentially spending $100 billion in a year on reinvestment, right? In AI and other resources and projects. I mean, that's really, really nice to see. That's what I want to see in a tech company, right? Not to, spend a lot on dividends, but reinvest it to grow the business and grow the revenue in the future, to future-proof yourself. So that's very, very important and nice, obviously, to see that with Google taking place. And let's not forget all the various other businesses that Google kind of has at least some ownership in, right? For example, with Waymo, I mean, self-driving, they're really starting to ramp up operation across the US with self-driving, almost robo-taxis, what Tesla wants to work on and sees the future. They already have that with Waymo in some way. I mean, I haven't tried it, but it seems to be really expanding in the US and people seem to enjoy it and seems to be really cutting edge, even though the car seems more expensive right now than Tesla robotaxis in the future. But having this technology, maybe licensing it to other operators like BYD and so forth, could be another huge revenue stream for them. Also, the fact that Google does investments in other companies, right? For example, they invested in SpaceX some time ago and apparently made almost $8 billion from that in terms of valuations. As the valuation of SpaceX increases, their share in it becomes even more valuable as well. So that's something to consider as well. And they've also recently had their biggest acquisition worth $32 billion, acquiring cloud security company Wiz. So that's obviously something they're going to be using that expertise to leverage, to sell to enterprises, etc. So they're really, really doing a lot of things. They're not just staying static. And of course, with regards to AI, for a while, I really thought they're really falling behind because it wasn't really something interesting coming out of Google. They had a couple of nice things like Notebook LM and so forth, but overall, it didn't really feel like a coherent AI strategy, like OpenAI, for example, right? They keep on coming up with new things. People are using it. So they really had that mind share, right? When you think about AI, you go to ChatGPT. There, Google was really falling behind. But now I feel in recent times, they started getting way better. I mean, I don't know about you, but I honestly started using more and more Gemini 2.5 Pro, which is available for free for most people. I have a professional email account, right? Like a Google Workspace. So here I probably get even more access to it, and it has deep research. And I honestly really, really love it. I use it a lot, probably as much as I use ChatGPT. Can really recommend. And the benefit of Google is that they're going to bake it more and more into all their products and offerings, right? It's going to be in Google Maps. It's going to be in email. I already have it in my professional email where it helps me craft emails, right? I say, be nice, say this, say that, and it starts replying on my behalf. So I don't have to copy paste in ChatGPT, go back. So I think naturally people going to use it more and more. And also the AI overviews on Google search are now shown to 1.5 billion users per month. So for example, when you go on Google, you look for something and at the top, you see this kind of AI overview, even though this is just an extract. AI overviews are even longer. So for me right now in UAE, they're sometimes shown, sometimes not, but you get the idea, right? So kind of this text, so you don't even have to click. And obviously that first link gets most of the traffic, which also has people worried that in the future, a lot of those websites over here may not get any traffic at all. Or if you get your answer in the AI overview, right? Why would you ever go on any website in the future? Let's see how it develops going forward. But so far, I think they're doing actually not too bad. Now, one big headwind for Google is that there's a lot of pressure in the US for them to potentially have to sell their Chrome browser, which obviously brings them a lot of data and insights, and they can really optimize all their targeting and advertising with that. So if they were forced to sell that to a competitor, and there are the likes of ChatGPT, Perplexity, even Yahoo apparently came out and said they would like to buy it. So we'll see if they actually go through and force them to sell it, but that certainly could have a potential short-term, at least, impact on the company. Now, another thing that is a little bit worrying for me is when I see the insiders and what they're doing with their shares. Here we are on Data Roma, and I can see, for example, the CEO, Sundar Pichai, I hope I pronounced it correctly, he has been selling for quite a while and, quite some big amounts when you look at it. And most other insiders as well. I mean, pretty much since the beginning of the year, sale. I haven't seen too many people, buying any new shares at those lower prices. So that's, of course, something to also keep in mind because those are people working inside the companies. Why would they all be selling, right? Do they expect things to get worse before they get better? Again, it doesn't have to be this case. Maybe they're just taking profits after a good year. That's normal also, right? I mean, a lot of those, people working in those companies, obviously they do get a salary, but a big part of their compensation comes in the form from shares. So, if they wanted to buy a nice house and so forth, they would have to sell some shares to take profits and then use that money elsewhere. So it's not super worrying, but definitely, as I said, something to keep in mind. And I would hope in the future to see some of them also buying more shares as the price continues to drop. And when we look at some of the biggest holders of Google stock, we see here, of course, some of the ETFs, Vanguard, who owns around, 3.7%. We have Fidelity, iShares from BlackRock, SPDR, S&P 500 ETF, which is the one I'm buying. So all those ETFs, obviously, the more investors' money they get, the higher their percentage of, company ownership. And then we have down here Sergey Brin, who was one of the founders of Google with 1.7% still. So is now a good time to buy? I mean, we see here different ratings. It's funny from the quant ratings, which kind of says, hold. Over here on Seeking Alpha, we have Seeking Analyst ratings, who kind of say in aggregate to buy. And then we have Wall Street Analyst ratings, who also give it a buy rating. And the price targets are different targets. Right now, we're around 160. So that's kind of the lowest estimates in the future. Then on average, around $200. And on the high end, $240. So again, those estimates are meaningless, but I do think, given the valuation drops, the price drops, the PE ratio we see right now, plus the major capex into future AI technology and other technologies, acquisitions that they're doing. Honestly, I really think there's a lot to like about Google right now. And I'm seriously, strongly considering to opening position. I used to have some parts in Google, but then I kind of sold out of all my individual holdings, put everything into ETFs. Now I started opening one individual holding again recently in Amazon, and I'm really looking to scoop up another tech stock, and I'm slowly starting to get more excited about Google again. I'm probably not going to pull the trigger right now. There's another company I have my eye on, so I'm still going to sit on the sidelines a little bit and see where the price is heading, but definitely something to watch. And if I compare to some of the other Magnificent Seven companies over here, probably one I like much more compared to Apple, which is still the most valuable company in the world. But at the same time, the growth I don't see right now, with them falling behind in AI and so forth. Microsoft, great company, but in terms of valuation, the market cap is almost 50% more than the one of Google, right? So in terms of growth, I see Google has more room to grow there potentially. Amazon I already do own. And also, if I compare Google to Facebook or Meta, I would definitely prefer to put my money in Google. But of course, as always, these are not investment recommendations. That's just my personal thoughts and opinions. Ultimately, your money, your decisions. If you have any thoughts or comments around this topic, pop them in the comments down below. Happy to hear from you. Next up, check out this video over here where I'm going to walk you through my favorite tools, websites, and trackers that I use to find stocks and ETFs to invest in. As always, thanks for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.